Ratings agency to downgrade South Africa's credit rating as a setback. The agency announced yesterday that it had downgraded the country's long-term foreign and domestic debt to BB plus from BBB negative, effectively taking the country's status to junk. This follows S&P's move earlier this week, which also downgraded our foreign debt to junk. Financial stocks have lost billions in value on the Johannesburg Stock Exchange following the S&P rating, and the rand has lost value as investors sold off South African bonds.
Market observers say the latest move by Fitch was more a question of when, not if. Immediately following the cabinet reshuffle of last week, the agency warned markets that it was putting South Africa on review. With two ratings agencies now deeming our bonds junk, any new bond investors will demand a higher interest rate for the benefit.
Banks are also going to suffer credit rating downgrades, and that in turn will make it more expensive for them to borrow money to lend out to individuals. So it does have the effect of raising the interest rate structure of the country at large, and of course that in turn dampens economic activity, and in the case of government having to spend more money paying interest on its debt means it has less available to spend on everything else such as education, social welfare, housing and the like.
It could take some time to get the country back into investment-grade territory, but in the meantime, society needs to deal with its current challenges to ultimately achieve more inclusive economic growth.
What we need to do now is actually to do the right kinds of reforms, not so much for the for the ratings, but for ourselves, to actually get those jobs, get people working, get people involved in the economy, make sure that we focus on the right sectors, make sure that we budget properly, we get the right kind of political environment, the regulatory environment, so that actually we are doing things that we know we should be doing without actually thinking, well, we are doing it for ratings agencies, because that has been a huge mistake. So we've got to do the work, because we've been saying we want to do the work for a very long time.
The rand has lost ground as a result of the ratings downgrades, but has proven more resilient than first thought. However, analysts warn that if Moody's follows S&P and Fitch's latest moves, there could be far more downside for the local currency. A weaker rand will result in the importation of inflation, which would likely force the Reserve Bank to raise interest rates, hampering the country's pursuit of economic growth. Nompumelelo Siziba, SABC News, Johannesburg.